All right, today we're gonna crack open a really powerful trading signal. This is one of those patterns that can help you spot a market reversal before it actually happens. Think of it as an early warning system, a heads up that a big shift in momentum might be just around the corner, potentially saving you from some major losses. Let's dive right in.
This is the question, right? It's what separates the pros from everyone else. How do you see the storm clouds gathering before the rain actually starts to fall? Well, the pattern we're talking about today is kind of like your own personal weather forecast for the market. It's a visual cue that tells you a change is in the air. And here it is. Our signal is called the dark cloud cover. Super simple. It's just a 2-candlestick pattern. And when it shows up at the top of an uptrend, it's basically shouting from the rooftops that the buyers are getting tired and the sellers, well, they're getting ready to take over. The name itself is just perfect, isn't it? It gives you the exact mental picture you need. Imagine the market is having this beautiful sunny day, everything's green, prices are climbing, and then, almost out of nowhere, this big dark cloud rolls in, casting a shadow over all that optimism. That's precisely the feeling this pattern captures on a chart. Okay, so to really get what's going on here, we've got to look under the hood. We need to dissect what's happening inside these two little candles. You can think of it as a dramatic short story, a tug-of-war between the buyers and the sellers. And we're about to see exactly who wins this fight. So it all starts with candle number 1. This is our sunny day. It's a strong, green, bullish candle that closes with a lot of confidence. At this very moment, the market feels amazing, right? The buyers are totally in control, and it looks like this uptrend could go on forever. But then, bam, the plot twist arrives. The second candle actually opens even higher than the first one closed. Now that looks like crazy optimism, right? But the sellers step in, and they step in hard. They absolutely slam the price down, not just wiping out those opening gains, but pushing it so far down that it closes deep inside the body of the previous day's bullish candle. This is it. This is the dark cloud rolling in. And what's so cool here is the psychology of it all. That little gap up at the start of the second candle, that's peak optimism, but it fails spectacularly. And this isn't just some small pullback. Oh no. This is a powerful, aggressive rejection of higher prices. It's a clear signal that the sellers have literally wrestled control away from the buyers. The entire move of the market has just been flipped on its head. But hang on a sec. Just seeing two candles that kind of look like this, that's not enough. For the dark cloud cover to be a signal you can actually trust, it has to follow two absolutely critical, non-negotiable rules. If you can master these, you'll be able to filter out the false alarms from the real deals. Okay, rule number 1, context is everything. This pattern is only a reversal signal if it shows up after a solid uptrend. If you see it in a market that's just chopping sideways, it's pretty much meaningless. Rule number 2, and listen up, because this is the big one. The second candle, the bearish one, it must close below the halfway point of the first bullish candle's body. Seriously, let's just pause on this for a second, because it is the most critical technical detail of the whole pattern. That 50% line on the first candle, that's the psychological line in the sand. Why? Because when the sellers push the price below that point, they're proving that they can undo more than half of everything the buyers achieved the day before in just one session. That is a huge statement. It's a massive shift in power. And hey, the deeper it closes, the more serious the sellers are. And this quote just nails it, doesn't it? A reversal pattern has to have something to reverse. Without that clear uptrend, the dark cloud cover is just two random candles on a chart. So please always check the context before you even think about trading this signal. So, you've done your homework. You've spotted a valid pattern that follows all the rules. Now what? Well, this is where the pros separate themselves. It's all about having a disciplined strategy. So let's walk through a simple 3-step plan to trade this signal the right way, and most importantly, manage your risk. First up, and this is key, don't jump the gun. You need to wait for confirmation. That means you only enter a short trade after the price on the next candle breaks below the low of our dark cloud candle. That's your green light. Second, you gotta protect yourself. Put your stop loss just a little bit above the high of that second candle. If the price goes back up there, hey, the pattern failed and you wanna be out with a small loss. And finally, know where you're going. Have a target. The nearest major support level is a really logical place to aim to take your profits. And please remember this. This is like trading 101, a golden rule. Before you ever click that button to enter a trade, make sure your potential profit is at least twice as big as your potential loss. This ensures that over time, your winning trades will more than make up for the losing ones. It's just smart math. All right, so we've got the basics down. Now let's level up and move into the pro tips. See, spotting the pattern is one thing, but the real pros know how to stack the odds in their favor. So let's look at a few ways to boost your accuracy and how to avoid some really common and very costly mistakes. So here are 3 awesome ways to make this signal way more reliable. First, look for what traders call confluence. That's just a fancy word for when multiple signals are all telling you the same story. For example, does your dark cloud cover pattern form right at a major historical resistance level? Whoa, that's a powerful combo. Second, glance at your indicators. Is the RSI, the relative strength index, screaming overbought above 70? That adds some serious weight to the signal. And finally, pay attention to higher timeframes. The daily or 4-hour charts, they give much stronger signals because they filter out all the random short-term noise. This right here, this is often the difference between making money and losing money. Amateurs, they get excited. They jump in without confirmation. They get a little sloppy with that 50% rule. They completely forget to look at the bigger picture. But the pros, they are disciplined. They always wait for confirmation. They are super strict about that midpoint rule, and they always check the weekly chart to make sure they're not trying to short a massive, powerful uptrend.
So you might be wondering, okay, where does the dark cloud cover fit in with other bearish patterns? That's a great question. It's considered a strong signal, for sure, but a bearish engulfing pattern, where the second candle's body totally swallows the first one, is even stronger. And then you have the evening star, which is a 3-candle pattern, and that's considered one of the highest conviction reversal signals you can find. Knowing this helps you gauge just how powerful the potential reversal might be.
So there you have it. That's the deep dive on the dark cloud cover pattern. But remember, just spotting the pattern, that's only the first step. The real art, the real skill, is in managing the trade that comes after, applying those rules, waiting for confirmation, and protecting your capital. You now have the tools to spot the clouds before the storm hits. The only question left is, are you ready to trade it?